Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky. This podcast is focused on educating operators, building better systems, and becoming a best-in-class operator. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today in the podcast, we have Ryan Christopher Nunes. Welcome, Ryan.
Hey, Gary. Thanks for having me on.
Yeah, great to have you on. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, for sure. So I grew up in New Jersey, did my undergrad at Georgetown, undergrad in finance and international business, and had a minor in French. And then I went to started working and doing my MBA nights and weekends at New York University, started rubbing shoulders with folks on Wall Street and decided that was the next logical step with an MBA in finance as well. And so got into commodity derivatives as the US was going through the shale revolution, which was just as transformative as the dot-com revolution for this country. And so just right place, right time, had a ton of success with clients, generated over $200 million in revenue, part of some pretty large transactions in the space. Really enjoyed the work that I did there. And for the past, 5 or so years, I guess 3 or so years that I was doing that, I thought about each year, I had a New Year's goal of, hey, what else could I do? Just seeing the cyclicality in oil and gas and just knowing that, things were changing with renewables and the push for green energy. And so spent a lot of time thinking about different avenues and what I was passionate about and what my skill set would be good with, a good fit. And heard about multifamily and was like, this is what I've been looking for. So kind of jumped right in and became a general partner in 2 deals and really wanted to get my hands dirty with asset management and really seeing that was really key. Operating assets, just given where we were in the cycle, was just really key to performance. And then met my partner, also an ex-Wall Street private equity, NYU. He was undergrad, but has his MBA as well, Jeff Yang out in California. And then we started looking at deals, underwrote about 300 deals. And we just closed our 3rd one in May. So just a few months back. And, it's been a great ride, been really exciting. Wish we bought more. But, what we found is the asset management is so crucial to this business. And so, what I wanted to do is kind of share my 3 thoughts or 3 tips on, kind of macro ideas and then 3 kind of tactical ideas in terms of asset management. So I'm a general partner in 777 units and a limited partner in over 3,000 units. So about 18 deals.
Yeah. And we met a few years ago and just been watching you, take down these deals and the quality of work that you're doing. I've been really impressed. So psyched to have you on and psyched, you're a fellow New Jerseyan. So I love
it. Great. Let's love it.
Yeah. All right. Well, let's jump into some asset management tips and tricks. What are some of the macro tips you'd suggest for someone just starting out?
Yeah. So, I would say the first one is buy right. And so it's much easier to manage a deal, an asset, when you've bought it at a good basis, where you don't have to, stretch everything and, push things on the residents or on the staff to make the deal perform, where you've come in. So fundamentally, when you come in with a head start, for instance, our last 3 deals, we bought them 15% below where other deals were trading. So we just came in with a natural head start and, we underwrote conservatively. So whether that was rent increases, income growth, in one of the deals that our first deal that we did in San Antonio last October, our NOI, income for year 1, we projected 0 growth, just given what was happening with COVID. But, we've almost been nearing about 10% growth. So when you have that kind of difference, all of a sudden you're able to distribute more, been distributing about 10% on that deal. So again, buying right positions you well in terms of your operations. So it makes your asset management, you still have to asset manage a deal, but you just come out with a head start. So just a fundamental principle. On the second one, I would say be involved with staff decisions. And this is something that I learned on my time on Wall Street. So, for every time that I interviewed at different banks or interviewed somebody, there's probably 10 to 20 interviews that you'd have to go through just to make sure that everyone had a buy-in on that person. If everyone, made sure that if they asked a question a certain way, and then we'd all pull together and say, hey, this person responded. Did you hear when I asked them this, they said this, just trying to pick out character flaws or any issues that would become, problems down the line. So just to suss that out. So, how that relates to our on-site staff is Jeff and I have the final interview in terms of staffing. So that's something that's really important. That's kind of non-negotiable item for us, just in terms of, making sure that we're going to be on the weekly calls with this person, supporting this person. And then they also feel then that if we were part of the interview process, that they have our buy-in and they feel supported when they come over and hit the ground running full time. So that's another key thing that is just key to our asset management, just kind of fundamental principle. And then 3 is take responsibility. So, we kind of have a saying that, it's the buck stops here. So, whether that's, people will point to a property manager, but, at the end of the day, it's our asset. And so, we're hiring them, but we also need to be on top of things. And so we don't just blame them when something goes wrong. We've had to fire property managers just because they weren't, living up to our expectations, and we felt the reporting and so forth just wasn't where it needed to be, and operationally it wasn't as strong as it could be. And so, those are decisions that, we're getting paid 2% of total income on our deals, and for the asset management fee, and that investors are investing in our deals and paying us asset management fees to truly asset manage the assets. So that means everything. And so we don't just say, oh, it's not a responsibility. It's, everything that happens at the property, we need to respond to, we need to figure out a solution. There's always going to be issues and problems that come up, but the asset managers, need to take responsibility and figure out how to solve those issues. So, that's something that, we find, pretty crucial. So I would say those are the 3 macros. So 1, buy right; 2, be involved with staff decisions; and 3, taking responsibility for what happens at the property.
Yeah, I love those. I love those 3 pieces of advice. And, for passive investors out there, almost every syndicator is going to say they're conservative in their underwriting, but just because they say it doesn't mean they do it. So, Ryan said they underwrote a property with 0 growth in the first year. So make sure you do check the pro forma and really understand their reversion cap and how they're underwriting, because everyone's going to say this is, super conservative, but it's not true for a lot of GPs out there. All right. So let's talk about tactical tips. Do you have any suggestions on the tactical side?
Yeah. So on the tactical side, just things that people can implement, today, if you will. So one is using Asana. So it's a great tool that's web-based. And what we do is we outline, here's the property manager task, here's things the ownership team needs to do, unit turns, marketing, if there was a site visit or follow-up items from our previous calls, like here, and then we label high, medium, and low priority, and we rank them so that, the staff were all aligned in terms of here are the things that we need to tackle. Here's what's important to success at the property. And we even have a section where we write out our goals, just so people feel they know what we're trying to do. And so we all feel, involved in that process. I mean, we really take a team, very hands-on approach. We value other folks' decisions. So it's an opportunity for them to comment on tasks, to create tasks for us too as ownership team. So I don't know what we would do without that. For the deal that we acquired in October of last year called Seven Pines in San Antonio. I was just looking earlier today, we've completed 207 tasks since takeover. So in about 10 months, 207 tasks, about 20 something tasks a month, which is a lot. So, what we try to do is just congratulate the team, say, guys, let's, though you can be in the weeds in terms of asset management, but looking back and taking a step back and saying, wow, look how far we've come with this asset. So those tasks range anything from, creating signage for the property and changing rents to a unit turn to Facebook posts or so forth. So, pretty meaningful tasks, and to accomplish 207 of them in 10 months it's nice to be able to track that, where, if you're just trading emails or after calls, it's hard to really track, definitively the progress that one is making. So that'd be my first one, is use Asana. Two is use Zoom. And that sounds, pretty simple, but, all of our weekly calls are on Zoom. The audio, frankly, is better. We can share screens, and, we can go through Asana together. And then, since Jeff's in California and, I'm in Houston, I may get to the properties often, but it's nice, at least a touch point every week, and to see people's faces. And I think that's valuable. And then lastly is use WhatsApp. So, it's just amazing to me how many tools are free these days. I think all of these tools are free. I mean, we did do the paid version for Zoom, so our meetings can go on for more than 45 minutes, but WhatsApp has been a free tool, and we have, our on-site staff on that. So our regional, as well as the on-site team and our general partners, just so that we can exchange notes. For instance, before this call, we were waiting on some appliances, and we have some unit turns and some residents moving in, and it's like, hey, those get delivered, and just, okay, good, they did. Or, hey, how's that unit K7, the townhome that we just renovated? Oh, here's some pictures of it. Oh, cool. So it's just, again, an opportunity to work as a team. And I think that we really try to instill in the on-site staff to think like owners. And I think a way to do that is through those three things: use Asana, use Zoom, use WhatsApp. So 3 tactical things that we use that we found tremendously helpful.
Yeah, that's awesome. I love, think like owners. It's so important, because that makes all the world a difference in your property. If your staff are just punching in, punching out, you could see it on when you walk other properties. But when they really care about your property, it's a world of difference. So yeah, excellent piece of advice. I have a follow-up question.
Sure.
When you're using WhatsApp and then email and text and phone, how I feel like I'm getting like beeped all the time. Like, how do you turn it off? Like an hour a day or certain times? Like, how do you manage all the different like alerts?
Yeah. So, for me, I'm used to that. So I came from a commodities, Wall Street background, where it's like you were constantly being hit up. And if you didn't respond immediately, you could lose hundreds of thousands of dollars on a trade. So, what we do is our main forms of communication are WhatsApp and Asana. So WhatsApp for just a day, if we need a quick answer on something. Email is used if there's, we get morning reports, so those come on email. But we try to actually use email less. My partner and I mostly communicate on iMessage. And then Asana is where we can just house everything. So here's a unit turn, here's pictures before, here's the bids, here's pictures after, here's a Facebook post that we wrote, or here's, tasks. Let's just keep everything in there instead of emailing me back and forth, because those emails just get lost. So we feel that Asana is like a vault. And it reduces, you can just, click the people that you want to be notified. So, it, in a way, it reduces the email kind of nonsense.
Right. Yeah. Nice. Great piece of advice. So I got another question. What has been one of the harder lessons you've learned regarding asset management?
I think, this is, I guess this, in a way, it's asset management, but, I think frankly, we were, very conservative in a lot of our underwriting, and it's great to be that way. But also you need to be practical, and in this market, you do have to be aggressive to win deals. So you have to kind of, straddle that line of, hey, this is possible, plausible, we've done similar things, or we've done it before and we can do it again type of attitude, versus, I'm going to underwrite zero and hope, like, for the deal that we acquired, another deal that we acquired last year, reserve parking. And I think this will, touch upon how quickly the markets change. But for instance, in our other income, reserve parking, we just set 11 spots in year one at $15. We're 10 months into that, 9-10 months into that acquisition, we've done 63 spots and now we're charging $30. So, you won't be able to win deals if you're just going to underwrite 11 now. You're going to have to say, hey, there is an acute need for reserve parking. But again, we just tried to be really, really conservative. But what the upshot of that was that we frankly missed a lot of deals, and now we see those deals coming back out to market, and it's like, oh my gosh. So I would say that's been the hardest thing, particularly, it's been kind of 2 years that we've been in the space and, bid on a number of deals, and now seeing folks sell those same deals at, massive premiums to what we bid before. So there was one deal we bid like 90,000. They're taking it to market now for 150. So, you can be conservative. It's just, you have to be practical as well.
Yeah, I think we were in the exact same boat, just way too conservative when we started out. And yeah, you've seen the same deals come around, and it's you kick yourself, but obviously you're in this for the long haul, and you'll be, continue to be successful for many, many years and get those deals back at some, down the road. So what is your asset management superpower?
I would say, what I touched upon before is, I like to be, or am involved in the hiring decisions. And I think that's really, I think a gift from God in terms of having a good read on people, having been in sales my whole career, and having met hundreds of people, thousands of people, I guess. And when I meet quality staff, I know it. So it's like, this is the person we want behind the desk interacting with our residents. And when I meet someone, we've met people and it was like, no, this person will not work at our property. So I feel like that's something that's just really important. Again, because we take responsibility for our deals, we feel we need to have a say in that.
All right. Awesome. Thank you for being on and adding a ton of value. A lot of great nuggets. Buy right, having your staff think like ownership, using Asana. So many great nuggets. Please tell the listeners where they can find out more about you and your company.
Sure. Go to lifechangingcapital.com. So we have some videos and some free resources, and you can reach out to me through that.
Awesome. To all of our listeners, thanks for listening in. And if you like this episode, please head over to iTunes and Stitcher and like, subscribe, and review this podcast, as it will help us grow our audience and reach more people. We will talk to you next week. Thank you.